Top 5 reasons people lose money in the stock market. We'll be counting them down right here in this video. Shaun G Academy. Nurture your investment and educational appetite. Top 5 reasons why people lose money in the stock market. Research shows majority of stock market traders or investors fail to make money in the stock market. Many people make the costly mistake when it comes to investing in the stock market. While many of the reasons for losing money are obvious, many investors or traders overlook them, especially new investors. In the video, we will examine the top 5 reasons why they lose money. But first, let's look at some market statistics. A look at the market statistics shows 90% of investors or traders fail to make a profit. And when you take a further look at that statistics, it shows that 80% of them lose money, while 10% of them break even. That just makes for 10% of them who makes money. Staggering statistics. Let's look at this on a chart. Look at the big disparity between breaking even and making money compared to losing money. There's a 70% disparity. Most people who trade would want to end up in the green segment of this chart, but the reality is an overwhelming majority of them would end up in the red. Just think about these numbers. Let's try to put it in simple terms. Basically, for every 100 traders or investors you know, 10 of them are making money, another 10 of them are breaking even, and 80 of them are losing. With that said, let's get right into the top 5 reasons why such an overwhelming majority of traders lose money in the stock market. At number 5, not doing any or enough research. Most people who purchase stocks lack the knowledge of the business behind stocks. It doesn't mean they are not smart people. It just means that they lack the financial intelligence to understand, analyze, and buy stocks. So you need to do your homework to determine what stock to buy, their cost, the companies behind them, and the history of the stock. Who buys something they know nothing about? Only the people who don't care about losing money. So if you buy stocks you know nothing about or very little about, like the company and the history and the future projection of the stock price, you most likely will consistently lose money. So don't just put money on a stock and think all the work is done, that the stock will just do the work and make the money. You have to keep focused and be vigilant with your investment. Things change from time to time, so you have to be aware and keep up with those changes and adjust accordingly. Some people rely heavily on websites and self-proclaimed pundits. There are tons of online articles, stock market newsletters, self-proclaimed pundits, and even friends and family all touting the latest stocks you should invest in. There are even websites that give stock ratings and recommendations. Too often though, people blindly follow these recommendations or advice without researching for themselves. Some of these recommendations might be paid for by companies who own the stocks, and other recommendations might be based upon someone's personal goals or interests. So you must remember that your investing goals are unique to you. You are putting your money to work for you, so you must understand what you are really investing in. But let me be clear, not all recommendations or reviews about stocks are bad or paid for. But you still need to do your own due diligence before spending your money. The next reason why people lose money in the stock market is trying to get rich quick. Patience is one of the greatest virtues required for investing. Investors who understand the value of patience gain from it, while those who don't pay a heavy price for it. So lack of patience while trading in the stock market will lead to a lack of success. In the short term, markets and stock prices are affected a lot by news. Any changes in economic, global, or political factors can impact the stock markets in the short term. However, in the long term, stock prices are governed by the fundamentals of the business and its earnings. Many investors buy stocks but panic and sell them at the first sign of the market correction or a price pullback, resulting in a buy high and sell low situation. Precisely the opposite of what they should do, that is, buy low and sell high. No one can time the market perfectly. Remember, time in the market is better than timing the market. So much of trading is psychological. Thus, making patience a great virtue for investors. Exhibiting patience when entering a trade and having patience while the trade develops are integral parts to successful trading and investing. Another reason why people lose money in the stock market is not diversifying their portfolio. As you become a more experienced investor, you learn that diversifying your assets is key to success. And even if you're a new investor, you'll constantly read information about diversification. By creating a diverse portfolio, you help weather the storm against stock market corrections, rough economies, and market downturns. The mistake is people put all of their funds in one or just a few stocks. The goal with diversified portfolio is to include various industries and categories that react differently from each other under the different economic circumstances. This way it helps reduce risk, especially in the long term. Now, don't think you won't experience some loss even when diversified, because it happens. The key is to mix your funds and invest in different sectors of the economy, like a mixture of technology, pharmaceutical, energy, automobile, etc. Ultimately, what you choose to invest in is based on your goals. But remember, always diversify. Don't put all your money in one stock or type of stocks only. At number 2 is, don't have a trading strategy. Having a clear trading strategy when investing in the stock market is vital to your success. Like a famous saying goes, failing to plan is planning to fail. If you don't have a plan and develop a consistent strategy, then you will be all over the place, jumping in and out of trades. Plan what types or kinds of stock you want to invest in. Develop an entry and exit plan before buying. Know how much funds you want to risk and how much the possible returns are. Do you want to risk $1,000 to gain 100? Is that worth it? Or do you want to risk $1,000 to gain 2,500? And now, the number 1 reason why people lose money in the stock market. Letting emotions drive investing decisions. Emotional trading is when a trader or an investor lets personal feelings and emotions impact their decision making. Bringing emotion into trading is a bad idea. The key to trading success is emotional discipline. Most traders would agree that having control of your emotions is one of the most important traits in the investing world. Between the media, stock market fluctuations, others telling you what to do, and your attachment to a specific stock, it's hard not to make emotional decisions. Showing your emotions and being human can be a great thing, but with investing, emotions tend to create costly mistakes that drive bad decisions. Someone with an investment strategy should follow it and never make an investment decision based upon immediate emotions. So remember these 5 reasons that causes people to lose money in the stock market. Not doing any or enough research, trying to get rich quick, not diversifying their portfolio, don't have a trading strategy, and letting their emotions drive investing decisions. And if this video was helpful to you, please click the thumbs up button below. And for more educational content like this, please subscribe. You can also click the bell to get notified when more contents like this are posted. Also, if you know anyone that this information might be helpful to, please share this video with them. And feel free to leave a comment down in the comment section below and let me know what you think about the information in this video.